Good morning, listeners, to Accounting Weekly. Welcome to this edition, where we will have an in-depth discussion with Professor Louis De Koker. Professor De Koker has been a long-standing feature within South Africa, but has also now gone overseas and are represented with other universities. So there's a big history. I think I met Prof. De Koker back in, it must have been 2008, maybe earlier, when we just started to look at the New Companies Act. I was still a newbie to company law, but was lucky enough to be part of the drafting team, met some amazing people, did a lot of roadshows with the Department of Trade and Industry to eventually deliver a New Companies Act. I was also sad to see, obviously, the closed corporation back then being put to the side. And now currently I'm busy with in Namibia, quite interestingly enough, where they're also reviewing their Companies Act, but there we've made a plan with the closed corporation as a chapter within the Companies Act, but that is a discussion we'll have for another day. In today's discussion with an influencer, stakeholder, an expert in the field, we're focusing on grey listing. Grey listing, I think, for most South Africans became an issue at the beginning or the end of this year, the end of last year, when suddenly the National Treasury started with a raft of new amendments, changes, expansions, and we all heard about FATA for the first time and grey listing and what that could mean economically for our country, affecting investments and risk profiles and interest rates and such. And then suddenly there was a lot of new requirements, especially for company secretaries and accountants and tax practitioners with regard to beneficial ownerships, new forms to be compiled with the CIPC. And I think two things happened. One, I thought, why didn't we know about these things earlier? Because it's not like it's hidden. We're representative on FATF and we know what they want. Why suddenly is this issue? And secondly, I was amazed with how much speed government could actually implement new things and requirements. Of course, we haven't seen that a lot, how fast government can move when they have to. And so there was changes made by CIPC, by SARS, by the Financial Intelligence Center, expanding the definitions of who's accountable institutions, and giving everybody very limited time to adjust. So I think, obviously, when you're a policymaker and an administrator of an act, it's a kind of, you just say something and it should happen. But when it hits the ground, there's individuals that has to implement this new requirement, and that takes a while, from engaging with the professionals and them then informing their clients. Is a whole change management process, which I don't think was properly addressed. It's just pushed down on the consumer, the business owner, and now suddenly they have to pay their professional service provider a lot more money for things that he doesn't understand. But then again, I think on the whole, a lot of professionals came on board, and everybody's now running with it. It just seems a little bit chaotic. In this process of trying to educate myself on grey listing and FATF and why suddenly all these requirements, I am subscribing to Professor De Koker's LinkedIn profile. I can really recommend for those that's interested in a broad array of things. He's a prolific writer. His insights is, I think, his insights is brilliant, and that reminded me now of something, Prof, you told me once. When we started with the company law and I had to draft the first working document on company formation, I was kind of in a panic and thinking, how can I finish this? And you just calmly said, work expands to the time allocated for its completion. And that is something you shared with me more than 10 years ago and has stood me in good stead. I'm actually applying that now, and that quote I'm giving to my staff members. But that's just broadly the history and how I know Prof. De Koker and the article that I wrote, that I read, being very pro-African and wanting to ensure that standards consider the African context, and wanting to ensure that, because it's always a difficult thing with global standards, once they are set up, how are they actually implemented in a country? Because a country is different from the global community. It's not the same thing. And then there's certain contexts and methods and practices within a country that has to be acknowledged. And there's many other ways of also, I suppose, getting to that end that we all want, and that is to stop financing of terrorism and funds not being allocated where they should, and not doing the correct tax payments. So there's a lot of ways that you can achieve that, but my own engagement, which is very limited with FATF, it's very singular, very one-minded focus, and then it kind of breaks down at the country level. So that broadly is the introduction. Accounting Weekly is a publication of the Chartered Institute of Business Accountants. CIBA is a professional accounting body in Southern Africa, started in 1987, and we offer a wide array of designations covering all aspects in the finance department, from bookkeeper right up until the CFO. And then we also have a strong focus on accountants in practice, doing different types of work for SMEs, whether it's tax or accounting or bookkeeping or assurance engagements. So that's the background. Let me then hand over now to Prof. De Koker. Please, Prof, provide us with a background and also what you're currently keeping yourself busy with.
Nicholas, thank you so much. It is great to have our paths crossing again after a number of years. I'm a lawyer. I'm a South African lawyer. I'm a Vrystater. Having completed my law degree, I was interested in doing some research in company law and corporations law, and I ended up doing the first master's in law on closed corporations. By then, a brand new South African business form specifically designed to be simple and easy for small businesses to use. And in the process, I identified some gaps in that act and ended up drafting provisions that were then later adopted to fix those gaps. So that got me really interested in company law. And I went further. I had an opportunity to study in Cambridge, and I deepened my insights there, returned, and continued to work on company law. At that stage, mainly doing work at the University of the Free State at the Centre for Business Law under Johan Henning to inform amendments to the Companies Act. Now, this was all in the 1980s, 1990s, most of it. But by the 1990s, my own research interests started to turn to the dark side. It became clear that we had many laws that were just not being enforced. And that's a failure of law. It doesn't help if you've got an instrument telling people what to do if you ignore everyone ignoring the law. And with that interest deepening, I started to study a brand new regulatory set of regulations that were emerging, and that was dealing with money laundering. Now, this was the 1990s. I was involved in Business Against Crime. We were working very actively to support the Mandela government to counter what we then feared was going to be a wave of organized crime. So I ended up on drafting groups working on the organized crime legislation that then became POCA, on revamping the money laundering legislation that we had in place then to make them fit for purpose. And since then, I've spent probably the vast majority of my time on money laundering control in South Africa, in Africa, but also globally. So all of these laws that we adopt are being informed by standards that are being set by an international body, the Financial Action Task Force, or FATF. And we were delighted when South Africa became the first African member of FATF in 2003. And that put South Africa in a very strong position. At that stage, I was at the University of Johannesburg. A couple of years earlier, I had started a graduate program, a certificate in money laundering control, to train the compliance officers, the regulators, law enforcement. And we took a few thousand South Africans and Southern Africans through that course to build capacity. So we were really delighted with this seat at the table. And that seat was important because FATF operates kind of like the UN Security Council. It operates by consensus. Every member around the table has a veto right. And having South Africa there, therefore, gave South Africa and the continent a very strong voice into the process. I think at that stage, the laws that were being implemented were setting the scene for effective enforcement. Unfortunately, that time period also started to overlap with growing state capture and with corruption at senior levels. And we saw the gradual erosion of many of the structures that we put in place. I was instrumental initially at Business Against Crime in proposing, advocating for, and then conceptualizing the special courts on commercial crime for South Africa. And we did that because at that stage, already in the late 1990s, we were losing prosecutorial capacity, we were losing investigative capacity, and we had to pool those resources to provide South Africa with an effective resource and group who could take action on the strength of the great investigations then still done by the police and other specialized units. But into the 2000s, all of those units came under pressure and were further eroded. We lived through that history. We know what happened. We know how that ended up in state capture. And if we fast forward a number of years, that has put South Africa in a position where its laws were not in line with the international standards any longer. That was clear, but there wasn't real political support to fix that. And hence, South Africa was, again, as part of a normal cycle, evaluated by its peers in FATF and was found seriously wanting. When that report emerged, it was clear that South Africa was facing a grave risk of greylisting. The clock started to tick on that. South Africa was given extra time, especially during COVID, and it was given more time than many other countries. But by the time that the politicians were prepared to have the necessary action taken, it was already close to midnight. And with a great big push, a lot of new provisions were adopted, but just too late to save South Africa from the grey list. So that is where South Africa is at the moment in terms of the grey list, and we can have a discussion about impact and about the provisions that were put in place. I may perhaps conclude my introduction by saying about in 1999, so it's 25 years ago, we had no resource available, no textbook on money laundering. And LexisNexis at that stage, Butterworth, was prepared to back a publication. But we had very little law available and no extensive legislation. This was pre-FICA, for example. But still, they were prepared to provide those in the field with a publication. And I started South African Money Laundering Control then. It has since expanded. In 2001, of course, it had to expand to terror financing. And since then, it's also expanded into a work that is now published with a team in South Africa. I relocated. I still work into South Africa and into South Africa, but from Australia. where I don't really work on Australian law, but I work into the region and at a global level. But it is great to have this collaborative relationship with South African experts who are at the coalface of implementation of these new laws that have just been adopted to bring South Africa in line with the international standards. So let me conclude there for the time being and hand over to you, Nicolaas.
Thank you for that introduction. As you were talking, it's a real impressive CV that you've shared with us, and I can just see how South Africa, coming from 1994, needed to set up all these institutions and protection mechanisms to protect us from large and intricate and complex criminal syndicates. And I think that's something that the public and maybe even professionals as accountants or tax practitioners don't generally appreciate, that there are these syndicates that are actively seeking how they can move money out of your country, win contracts not on a fair basis, not deliver the services and take the money. And that if you leave that unaddressed, it can really ruin your whole economic system. There won't be inherent trust in the system and so forth. You mentioned creating some of these institutions or being part of them as they were being created. And it is something that obviously leaves me also very scared at night. Sometimes I wake up in a sweat thinking about where is our secret services and our spies having to protect our borders and our intellect and our IP, and never mind even then the protecting us against criminal syndicates. And since then, I think the world has just become much more complex, much more integrated. And even now with the free trade agreements that all the African nations have been signing, you still have that criminal aspect. Maybe just your quick views about the institutional capacity and how we can all collaborate or support, or the actions that's necessary to re-implement that, and why that's necessary.
Nicolaas, that's a very good question. I'm going to provide an answer, and then I want to circle back to an important driver. South Africa has a challenge in terms of human capacity around compliance with laws. That challenge is not confined to South Africa. We're looking at global pictures. Frankly, I can't see any country that has sufficient capacity to support the compliance levels required by regulation and by laws. And that's where I want to circle back. I don't think we have the ability to train enough people at the speed at which it's required to build the capacity to ensure compliance, because the laws are becoming even more complex with time and with our context changing. We're seeing it at the moment with crypto or virtual assets. The technology is improving. The technology is changing and delivering new business models that we try to control through regulation. New regulation is being rolled out. It's complex. While we are trying to get people to understand what the law is about, the model is changing again because further technology is being developed. I'm really calling for a rethink and a reset. I think this chase to capture our fast-changing world through detailed regulation is bound to fail even further. I was struck by what you said at the outset about the close corporation. I haven't thought about that for quite some time, but the close corporation was an attempt to solve a problem. So in the 1970s, early 1980s, a problem was developing because the South African business community was not really complying with the Companies Act, because so few companies had the capacity to understand the complex act. And that was the reason why an attempt was made to investigate a simplified business form for small business. And keep in mind, if we look at corporate forms, companies, the Companies Act is drafted for public companies. Public companies represent generally less than 1% of all the companies in a country. The vast majority of companies are small businesses. The vast majority of them have one, perhaps two shareholders, often family members. And yet we try to regulate them as if they are all on the verge of listing their shares on a stock exchange. So to simplify the law makes it easier for those who are honest to comply with the law. And when they comply with the law, we can take them out of the equation. That means we clear the decks. We make it easier for our institutions, our law enforcement, our regulators to focus on what's really important. And those are the systemically big institutions, the dishonest ones. But once you've taken all of the honest people out of the equation, you've got your jungle left that you can then police. At the moment, everything is a jungle. And unfortunately, I think this is very much the case in AML, money laundering, and I dare say, unfortunately, especially now in South Africa. In an effort to avoid grey listing, a lot of laws were adopted very quickly. I've grown very cautious as a drafter. I've grown very fond of regulatory impact assessments to be done to inform the drafting of our rules. In the past, in the 1990s, when we often drafted based on our own brilliance and common sense. And I can go through a number of examples where what we thought was a great idea actually turned out to be not too bad, but actually problematic because it held consequences that we just didn't envisage. So I'm more alive now to the need to think through some of the consequences before we adopt measures. Now, I'm also a customer of South African institutions. For instance, in the recent past, I got my FICA letter, and I was required to provide a notarially certified copy of my current Australian passport. Now, the problem is I don't have South African notaries close by where I live in Australia. I could access them, but it will cost me about 2,000, 3,000 rand, the equivalent, just to get an appointment in order to have that copy of my passport notarially certified. So I started to engage the institution by saying, I can send you copies of the electronic visas issued by the US and other jurisdictions on that passport. You want to make sure that the passport is original. These other countries are very good. That's what they do. They spot fake passports. So if I provide you with a number of those electronic certificates that they've issued, and I'll give you the originals because I can share that with you, that should put your mind at ease. They returned and said, no, that's not sufficient. I need to obtain a notarially certified copy with red wax, as is done in South Africa. Then I need to take a copy of that and send them a copy by email. So not the original, a copy. Now, which means all they want is a photograph with a document in red on it, and a signature that can be fabricated today with ease. The electronic visa can't be fabricated in that way. And this is what we get caught up in. I understand what they want to do. I understand the need to manage risk, but we need our institutions to build the capacity and think through how best to achieve that objective. What we now end up with, and this is just one example, I know many South Africans going through similar pains, are trying to jump through hoops to meet requirements, and requirements that have been set by government, but also by institutions, without really thinking through the implications of that. And that is a problem. So how do we get out of this hole? What I'm calling for is simplification. Let's simplify, let's go back to what we originally wanted to achieve. And when we speak about global standards, again, keep in mind, South Africa has a very powerful position. It may be grey listed by FATF, but it's still sitting around the table. And around that table, it has a strong and important voice and a powerful veto. Going back to what we want to achieve, I think will serve the interest not only of the developing world, but also the developed economies much better in the longer run. Just perhaps in conclusion, FATF itself is consulting at the moment about new changes to the standards. The standards aren't fixed. The standards are actually increasing and changing every year. Certainly since 2013, we've seen at least 3 big and a number of smaller changes to the standards, all hiking the bar. Now, South Africa is still trying to comply with the old standards, but it's also got to catch up with the new standards, including the new standards that it is collaborating on at the moment. Somewhere we need to slow this pace down and allow everyone to catch their breath, refocus, and then rethink what we're doing, because I don't think what's being done at the moment is sustainable for anyone.
No, I agree with you. I work with many, or I meet with and make submissions to many regulators or administrators or authorities that have to implement these laws, and you can understand their difficult position. They have been trained to approach the world in a certain way, and that's regulation. So it's very difficult then to understand when you make a submission and you want to present the simplification issue. But I think you mentioned previously your work that you did at the University of Free State. I think you called it the Center for Business Law, where there was this center or resource able to do research and submit this to the policymakers, whether it's Parliament or whether it's the regulators themselves that has to draft the initial version of an act. And I don't really see that happening. There's no such discussion papers. Mostly it's anecdotal comments that a regulator gives on why they would say a very generic thing like it's in the public interest and therefore we must do this. And that kind of settles the argument. And nobody can argue against public interest, otherwise you're a bigot. But if you just ask rational questions, then you see this isn't the best approach. The other thing is a risk-based approach. You mentioned simplification, but surely there has to be a risk-based approach. And that's not really being shared by SARS. So the Tax Administration Act provides for tax practitioners. It came about a few years ago so it's a recognized profession within the Tax Administration Act that tax payers can consult with tax practitioners. But the SARS doesn't really share with us any information about money laundering or the schemes that's used by the criminal syndicates. So it's very difficult or impossible for us to inform our members. So we have this generic set of standards, how to be an ethical tax practitioners and do your due diligence, but on which specific area should we focus on? And now we have to do all the procedures on all our clients. When in fact you can isolate and see who are these risky clients and then focus on those areas. So just your thoughts on the two issues. One, how is there a supporting structure for regulators, meaning research units from universities engaging with them? And how do we get all of these stakeholders operating better together? instead of each one trying to implement the standard that's not practical.
On supporting structures, the support is definitely available, and you part of that. The problem is that the structures that the regulators themselves put in place in the past have collapsed, and all that is required for them is to put similar structures in place again. So the Centre for Business Law was supporting the then standing Committee on Company Law that acted under the Companies Act and had to advise on amendments to the Act. The Act did not require the Standing Advisory Committee to appoint the Centre for Business Law, but it was a resource available to it, and it used that opportunity, and it also established relationships with other universities. So unfortunately, the starting point is the regulator. And often, if the regulator doesn't get the message, it needs to be the minister or the president, because this is something that makes sense. A rule must come from somewhere. Whether a rule meets an objective in a particular way must be tested. Once you've implemented a rule, is it effective? Is it efficient? How do you create a feedback loop to give you information on whether you are a good regulator or not? And I can understand why some regulators may not want to have that loop in place, but Parliament should want it. Civil society should want that. And then where's the business community? In the end, the business community ends up paying the biggest share of the costs that they pass on to consumers, but at least they are organized. They can put some of this capacity in place. They can produce reports on the quality of regulation and, frankly, on the quality of the regulators. So it's possible, but we need key figures to recognize the need and the value of this. Moving to the risk-based approach. Look, I'm fully in favor of a risk-based approach. I think the question that is important is to determine who should determine the risk and how. So in previous years, when no one spoke about the risk-based approach, rules were still risk-informed. Rules were made to address problems. Rules weren't made to address problems that were irrelevant. They were made to address problems that were pressing. So generally, it was the regulator who performed some form of assessment to decide that this rule is important enough, it needs to be adopted. Around the global financial crisis and in the years leading up to it, there's been a lot of work done on the risk-based approach, meaning shifting that obligation from the shoulders of the regulator to business, with businesses saying, and especially big businesses, we are better at determining our risks than the regulators are. So give us the opportunity to manage our own risk. I attended a number of those meetings, and I listened in all to these big institutions telling us that they are so good at managing their risk. We did not know the truth at that stage. I did revisit those words often after 2009 with a global financial crisis, because that made it very clear that our biggest banks and biggest insurance companies that are supposed to be the leaders on risk assessment and risk mitigation had no idea how to manage some of the most basic risks. They couldn't identify the risks in the system. That led to the global financial crisis. Governments had to intervene with taxpayer money. And as an academic, naively, I would have thought that that would have kind of be the end of the idea that businesses aren't particularly good at managing risk. And yet, after the global financial crisis, more and more standards hammered down this approach. Not only taking as a point of departure that businesses are good at managing their crime risk, and there was a jump. Previously, we were speaking about financial risk. There was a jump made to crime risk. Not only the assumption that they're good at that, but also bringing in requirements compelling them to assess the crime risk and then mitigate that crime risk. They had to assess the crime risk without any information about crime. And that was a problem. And then with no guidance on how best to mitigate the risks that they did identify. So as a result, we've ended up with a set of rules that are, to my mind, over-designed and under-designed. Missing the point in many cases, missing the criminals, creating gaps, but creating gaps at huge cost. It's certainly burdening honest customers and smaller customers far more than the larger customers. And money laundering is continuing unabated. And so are the criminals. And yet, we have a raft of regulatory structures and compliance functions in place, and boxes are being ticked all over, but we're not really experiencing a lessening in criminality or an improvement in the levels of honesty. So there's something wrong. And I do think on the risk-based approach, we may need a bit of a reset. Now, in terms of SARS and tax, that is not my area at all, Nicholas. That's your area. But I wonder whether there wouldn't be a better solution lying in SARS identifying risks that should be managed, or at least the higher risks, and lifting them out and capturing that in regulation, rather than expecting of every professional to somehow identify this risk on their own correctly and then manage it correctly.
I totally agree with you. I think what's lacking is this coordinating mechanism. I think you touched on it. There is definitely a model for big business to help fund the research units. Come to think about it, I don't know whether like the Auditing Profession Act and other, or maybe even the CIPC administering the act, the Companies Act doesn't provide a research unit for the CIPC, and the Auditing Profession Act doesn't provide a research unit funded for the regulator. So maybe it's a funding issue. It's not even being addressed. Moving on to some other aspects, but you've given me some great ideas. I think we have some connection with Business Unity South Africa and the South African Chamber of Commerce. I can definitely see something developing there, and rekindling this move to good research reports behind the regulations. I think in one of your posts on your LinkedIn profile that you shared, your articles that you regularly write on LinkedIn, you mentioned you had a view about the economic impact on grey listing. Because when it was just announced in South Africa, the media went wild about how our whole economy will collapse, and it was like the end of the world. But here we are still. It wasn't the end. Just explain that again about the impact of grey listing and how the citizens should understand the effect thereof.
Impact of grey listing is very controversial because it differs from country to country. And we have studies identifying big impact, and we have studies identifying no impact at all. And when you see studies differing in such a way, it's important to analyze them and look at their methodologies and look at the data that they've used. Now, a number of studies have used the same data, but different periods. And the grey listing actions by FATF now goes back nearly 25 years to around 2000, when they first started to list non-compliant countries and territories. And as a result, there's good data available around that period, but it's also got to be viewed in context. Those were the first countries listed. The first countries who were put in the naughty corner were really shunned, and the other countries were horrified. But since then, more than half of the world's jurisdictions have been grey listed. So there are periods, and we've got that very distinct non-compliant country and territory period. We've got a middle period where countries were listed for two reasons. One, in both cases, you had to have a system with strategic deficiencies. But either your government was not prepared to commit itself to improving the system to comply with international standards. That was the so-called dark grey list, or the country fully committed itself to expeditiously implementing the necessary changes. So you had one list with countries that really shrugged off the international community, mixed with other countries that immediately said, we start working now, this is our action plan, this is how we will fix it. So obviously the responses to the list in that period differed. Some focused on the dark grey countries, others focused on the light grey countries. And then from about 2016, only the light grey countries were listed. A country is only grey listed when it has an action plan to work with FATF to fix the identified problems, and that's precisely where South Africa is. Now, if you look at it from that perspective as a bank, if you look at South Africa, and South Africa for you is a good business opportunity, what that means is it's got a problem at the moment, it recognized the problem, it fixed some of the problems, it's got an action plan to fix the remainder, it will probably be sorted in 2-3 years. That's actually a very comforting message. You're not necessarily going to withdraw from the country. You may want to withdraw from a country where they got a problem and they have no interest in fixing it, but not from grey listed countries since 2016. And yet, despite expecting to see this, we did find evidence of negative impact. So what might be causing that? Well, the potential culprits is the EU and the UK, despite Brexit. So the EU adopted a higher risk third country list, where the European Commission was required to identify countries where, when they do business with European institutions, may expose Europe to risks. And in order to fill out that list, they drew on the grey list. The problem is, once you're on that list, then the EU legislation compels all of their banks and other institutions to employ enhanced due diligence. So the highest level, the strictest level of due diligence in relation to all of the institutions linked to that country. So the UK, when they Brexited, decided to keep London and the EU aligned in that regard. And so there's an equivalent UK list requiring the same of all UK institutions. Whether you are impacted as a country depends on your exposure to the EU and the UK. We did a global study on global trends, but each of the impacts are very specific to a country. So South Africa is, in a sense, a developing case study. The evidence of impact does not show up immediately. Frankly, we've even found some correlations of impact or evidence of impact on delisting. that when you're taken off the list, instead of everyone lauding you, there's another slump because there's bad publicity. So unfortunately, there may still be some pain ahead for South Africa, because I do think its exposure to the EU and the UK in particular does mean that some of that enhanced due diligence pain will filter through. It filters through in the slowing down of business relationships. We do know of South African institutions that have been uncoupled or debanked by EU institutions, because they are required to do so by their very strict regulation or by their risk assessment. So I'm very glad for any impact that is not being felt. But I do think it may take a bit of time before we will get the full picture and we'll be able to reflect on that. What I would like to see is that far fewer countries are grey listed. We now have a disgraceful state where 12 of the 21 grey listed countries are from sub-Saharan Africa. We are entering a phase where most countries are now fairly compliant technically with the FATF standards. So they all have the laws in place. We're speaking of possibly around 85% in terms of technical compliance, which is really great. The problem lies in implementing those laws effectively. And South Africa has a problem with that. That goes for its new laws too. And so do many other developing countries, because effective employment requires resources, and those resources are not freely available.
Thank you, Prof. De Koker. This was a very interesting session. I'm sure that we'll have a follow-up session, maybe on Namibia's development on the Close Cooperation Act and how they plan to still have it alive. I had a big fight, well, not a fight, I must say an exercise to keep that going, and finally we managed to get it as a chapter. But on relating to money laundering, I think your closing point on resources, it's maybe an analogy could be the same as with Eskom and now the water supply in South Africa. If you don't keep your repairs and maintenance up, if you don't fund your and the development of capacity and build that, then the system will break down, because if there isn't capacity, if there isn't individuals with the necessary skills to support something, it cannot last. So there is a rethink. Maybe that's a blind spot being in our education processes. Who are we educating? Why are we educating them? And then there's definitely a lack of coordination within the system between different role players and stakeholders. We're talking past each other, not really open-minded about different views and ideas. So there's definitely like a Kudesa, something necessary just to reassess, and maybe it's time, because the world has developed at such a speed. Some final words from you, Prof, before we then close the discussion. I'm sure we'll have a lot of engagement from the audience as the weeks go by.
Well, thank you. No.
I'm sorry, Prof, you just broke up there. You can just repeat.
Yeah. Thank you so much for the opportunity, Nicholas. I really appreciate the discussion. I'm delighted to hear about what you achieved in Namibia, and I'm very happy to support that. That, incidentally, is going to help them with beneficial ownership registries too, because the close corporation is so transparent. There are a number of other benefits that they're going to have that South Africa might have maintained and could perhaps return by taking a new look at the closed corporation a few years down the line. But coming back to money laundering control, this is really important to get right for South Africa, given the crime levels that it faces. And I do think a new look and a new think that doesn't focus simply on compliance with international standards, but on reforming those international standards is going to be important. And South Africa has had significant impact on the international standards. On financial inclusion, the work that drove a whole new recognition of some of the problems caused by the FATF standards. And as a result, the way in which they think about that standards was driven by South Africans based on research done in South Africa in the mid-2000s. South Africa can make a difference at that level. And I'd like to see that being done, kind of drawing on the important professional resources and your experiences at the moment of you and your listeners in the field. That is what we need to present and leverage to build the structures that will also serve our interests, but will ensure a financial system with greater integrity, but with less pain for everyone.
Well, that's a good summary. Thank you, Prof. For, your words are like good wisdom, like a good wine that has aged well. Thank you very much for sharing it with us. And then we'll set up another session maybe on company law and close corporations, especially in Southern Africa, and how we can coordinate that. And thanks. We'll speak then again. Thanks, Prof.
Excellent. Thank you so much. Enjoy your day.
What do our defining moments look like? Just like this moment right now. They look like pride after achieving that long sought-after goal. All the small victories along the way that didn't feel momentous until we saw them in the rearview mirror. They look like the courage it takes to take that first big step. All the times we fail and rise again. And without even knowing it, cultivating an inner strength that is contagious along the way. They look like the inspiration that comes from knowing that we are not alone. They look like the human relationships that give us wisdom beyond what data ever could. They look like the curiosity that comes from exploring, that allow us to create and contribute. They look like education that unlocks our full potential, using our knowledge for impact. They look like choosing our own definition of success, over hiding, over hustling, over pretending. They look like others showing up and recognizing our efforts after all the times we already showed up for ourselves. They look like being bold enough to be extraordinary. They look like you. Right now, right here. First, we help you see your defining moments. Then we help you seize them. We are the accounting body for everyone. We are the accounting